All right. Hello, everyone. My name is William Mucker. I'm a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Scaling a Self-Storage Business for Maximum Returns, behind the scenes with a sponsor with Corinn Altomare, founder of Hearthfire Holdings. I would also like to thank you for joining us today, Corinn. And before we get started, I do have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transactions into that investment. Here is just my contact information if you or anyone that you know who you believe can benefit from the information presented today. Have any questions about what is discussed in the presentation and how it applies to self-direction, please do not hesitate to contact me. I will be more than happy to help. And without further ado, I'll pass the controls over to you, Corinn.
Thank you, Will. And while you were kicking us off, I did have a couple of folks put into the Q&A. It looks like the chat is disabled. So I'm not sure if that's something, Will, you can maybe try to troubleshoot. Thank you, Lucian, Lynn, and Pat. Thank you for letting us know. So maybe that's something you could try to troubleshoot in.
Not to cut you off. Sorry, I think I just solved it. So please feel free to use it as well. Thank you for bringing it to my attention.
Let's see. Chat test. Yes, looks like. Okay, perfect. This is why in the first few minutes, we always ask people to try things out for us. So thank you all, those of you that were proactive.
And just in case, it looks like you're just chatting to hosts and panelists. If for any reason you want to address everyone,
yeah, let me change that. Looks like maybe I cannot. When I try to chat back, I have the capability just for hosts and panelists and for you, Will. So I'm not sure if that's a setting specifically for me.
I think you're right by that, and I think I just solved
everyone.
It, so.
There we go. You did.
Perfect.
Look at you solving all kinds of things as we launch out today.
Maybe next time I'll have it prepared before we get started.
All right, we're here now. It's great. Thank you everyone for being patient with us as we get launched. I will reiterate what I requested earlier as we were getting started. I love to know who I'm speaking with. And so if you wouldn't mind, don't be shy, post into the chat, whether you're already an active investor in storage, if you're a storage investor operator yourself, if you're already passively investing in storage, or if you're here primarily today, just for a first starting to explore and learn more about the asset. What I've prepared for today is not my foundational why self-storage, but I can go a little bit there depending on what I hear from you all in the chat. Otherwise, my focus for today, as I tried to capture in the description for this session, is really sharing with you my story and the story of my firm as we went from our first storage location in 2019 to acquiring another 10 in 2021, another 4 last year, and we're currently under contract for another 4 for this year. So this is really a story of growth. Before I came to self-storage, let me just get you another slide view to look at here. So I'll structure the conversation today, and I will keep an eye on the chat. Thank you, Lynn, for letting me know you're a passive investor, passive income. That's where it's at. We all don't need any more jobs. I will structure today's conversation really around people, because without people, all of this falls apart. So our experiences there, process, how we get the job done with the people when we have the right people in the right seats, our tactics, strategy, what our strategy was when we started, how that has shifted or expanded as we've grown in experience and as a company, and then technology, all the tools that support all of the previous topics. So those are our main guideposts for today. I will keep an eye on a chat. on the chat. Please feel free to jump in if as I go, something brings up another question, you want me to answer it there and then before we forget. I'll keep an eye across all my screens and try to address all of your questions and comments in real time as we go through. So I want to say, first and foremost, I want to acknowledge that these are very interesting times. And so as we consider the future performance of the stock market, the state of our world, and how best we can take action to protect ourselves and our families' financial legacies, I want to start by saying thank you for joining me today. Your time is absolutely your most valuable asset, so I appreciate it. I respect it. Thank you for being here. And my intention is to make this the best use of your time by giving you some insight of what I've seen in my now 10 plus years of investing actively in real estate. I started in multifamily and now I'm in storage. And hopefully that will give you some deeper insight as you're either considering adding storage to your investing, considering investing at all. Flora, to your point, as you're maybe considering getting started, diversifying your investment portfolio and what you can do with retirement accounts through what Camaplan provides, or if you're already in storage, maybe adding to that, or how this diversifies the rest of your investment portfolio. We obviously are very bullish on storage, so I'll talk a little bit about why there. Very quickly, here's a quick timeline of my life the past 10 years. I started in multifamily, and even before that, my first career was in the arts. So I came to real estate investing, seeing real estate as a tool to build a financial foundation for myself so that I could pursue my passions without requiring those passions to also pay the bills. And then as I became exposed to more deal flow and more opportunity, sharing that with others. So initially with my family, with my very close friends, and now here we are 10 years later, where we have about 200 investors with us on this journey. And I love seeing that. And I love bringing the impact of providing passive investment to other families and to other young individuals for building up this financial grounding for themselves and their loved ones. So quick visual graphic here of the past 10 years of Hearthfire. We pivoted from
Corinn, sorry to
Yes.
cut in here. It looks like my screen's still showing. I don't think you have started your share yet.
Oh, goodness gracious. All right.
That's
Well,
my fault. I should have brought that up a little bit earlier.
So let me.
And thank you, Tom, for bringing that to the attention as well.
All right.
Great. Now,
Now we're seeing.
perfect.
Okay. All right. So hopefully now you can see a quick visual timeline interpretation of the past 10 years of my life. Started in multifamily, exited multifamily in 2018. My W-2 day job was for the Federal Reserve Bank, and acknowledging that economic cycles generally go in 8 to 10 year terms, started looking for something a little bit more recessionary resilient, as well as larger and more scalable. So after really cutting my teeth, now I'm seeing the chat to David and Tom's point, after really cutting my teeth in residential real estate, that will thicken your skin very quickly. I loved self-storage and the simpler business operational model there. I'll talk a little bit about that in process and tactics. So full scale, sold all of the multifamily off. I had some smaller syndications in that space with family and friends at that point. As I was educating myself about storage, did the same for my investors. And so all of those investors came and pivoted with us into storage for our first acquisition in 2019. As I mentioned, super high level. 2021 was a massive year of growth with 10 acquisitions. Last year with 22, 4 acquisitions, 1 sale. And this year so far, just under contract on 4 projects. So we'll see how the rest of 2023 shapes out. So that's who I am, where I'm coming from with you today. And let's see if I can advance the right slide. There we go. So on the people topic, fundamentally with storage, you are still in a people business, right? You are renting space to individuals who are looking for either on a personal or professional basis to store material belongings. The differentiator here between storage and multifamily or single family is if you're managing your property correctly, you don't have people living in your investment, right? So much simpler business model here operationally, and you're not dealing with landlord-tenant laws, and you're not having to deal with maybe eviction moratoriums or the federal government deciding to get in the middle of your business. So I was thrilled that we were able to make that pivot to storage and out of multifamily before COVID happened, and really in the nick of time as far as where all of our market cycles have proven out to be. From a customer utilization basis, what we are seeing in storage is, let me pull up this graph here. Let me see if it'll come in time. All right, so we saw huge spikes in utilization during COVID, right? With all of the changes and shifts in people's lifestyles and work and everything else, there was this massive peak of utilization throughout COVID. We saw that start to peel off in the final few quarters of last year. We're not concerned about that because, as you can see, we're still above where we were really in 2020 and even before COVID hit. Our national utilization rate is 11.1% of households that are using storage. This is an increase. And what COVID also taught us was it introduced using storage to the younger generations, well, to all the generations, but particularly the younger generations, seeing storage as an on-demand service, supporting perhaps some moving back into the home or perhaps a more travel-friendly lifestyle, right? So rather than keeping up an apartment commitment or a home, putting your most treasured belongings into a storage unit and then traveling or living remotely, or maybe living and working from an RV. So we saw a ton of that during COVID. We're starting to see some of the utilization come back down, but it did introduce this concept, and there is a continuing usage of storage along these lines because it became so strongly introduced during COVID. Some of the market trends that we're still seeing strong rent increases. We're still seeing continued strong demand, and again, just higher utilization of the population at large. Now, on the team makeup side of things, when we started, we were boots on the ground ourselves. We owned and operated the first acquisition ourselves for the first, not the first full year, at least the first 3 to 6 months, where we were boots on the ground, wearing all of the hats. So customer service, site maintenance, marketing, call center support, everything across the entire range of the business operations of storage. Today, our team looks a little bit more like this, and where these different roles and resources came in order was essentially bringing in 2021, bringing in additional underwriting support, bringing in additional asset management, bringing development and construction in-house as we expanded into more expansions and now into ground up development. So you can see a huge growth in the team. I can go into this in more detail. I can perhaps circle back to this, but I want to make sure we get through some of the other topics. So I'm going to actually move along pretty quickly here, unless folks want to hear more about all the team members and how they came in and at what point in time. Moving into process, storage is very simple. Our process and our strategy with storage is simple. We look to improve the customer experience, and by providing a better quality of products, thereby being supported to increase our prices. and ultimately deliver stable investor returns. So for example, this before and after photo here on the left, this is an acquisition that we closed on last month, actually. You can hopefully you can see in the photo, there is actually a manufactured home that's put on the front of the facility. This is what's being used as the office. And you can see that the signage is a little bit dilapidated and beat up from the weather and the elements. So the after picture, this is a rendering. This is an expansion project with significant construction that is underway. This is our after vision. This is what will be going in there. The manufactured home is now gone. We will be putting in multi-story climate control storage. As you can see, much better signage. This road has fantastic vehicle per day traffic. That's something that is very important for storage. You want people to be able to see and get to your facility. So where this site is, it's on an intersection of two major highways. It's got about 34,000 vehicle per day traffic. So we're really taking advantage of that by building up so that cars can see more, putting in more signage, adding better parking, as well as increasing the gating, lighting, signage throughout the facility. And so that's the physical experience. That's the physical component of the customer experience. Hopefully the after is the right-hand picture, Lucian. Hopefully, let me know if not. But before being the left, this is the same facility. So the before being the photo on the left-hand side of the screen, and then the after being the photo on the right side of the screen. This is just a rendering. The construction is underway. And so it'll be great to get some actual after photos, but this is the rendering and the vision that we have for it now. So that's the experience of improving the customer physical on-site experience. The online experience is hugely important as well, right? So as in self-storage, when we talk about value add, a huge component of the value add is actually in the business operations. So it's in implementing technology, implementing a mobile-friendly website, quick and easy online selection of the units, e-signature of documents, online payments, and then once the payment is received in the system, you receiving a code to move in right then and there. So within the space of a few minutes, our customers are able to find an available unit, lock that up, make sure that they have contract signed, payment secured, and then they're immediately sent a gate code and able to move in and essentially self-serve and move in all within minutes. Now, during the customer life cycle, it's also very simple. We do auto payments. The gate is integrated with our backend management system. So if somebody falls behind on rent, our management system communicates that to the gate. The gate immediately denies them access to the site, right? So we don't have folks on site that are not paying customers. Security is a huge thing in storage. 84% of storage customers are female. So this is something that we do pay very close attention to. Lighting, gating, security cameras, all of that to make sure that our customers are having not only the best experience, but also feeling safe and comfortable whenever they visit the site. And then for the move out process, just as simple. We have signs across the facility with a, text your name and your unit number to this phone number for a very simple text and move out process. So implementing technology to improve the overall customer experience, which is what the modern day customer expects nowadays. COVID was a huge boon in this case because COVID trained us all to want self-serve, to maybe not necessarily have to meet a person face-to-face, to go at our own time and leisure. And so that adoption has really helped improve the overall customer service within the self-storage industry. From here, once we do our job right and improve that experience for the customers, then we feel founded in increasing our prices. So I have here screenshots of, this is one of our full cycle projects. Hopefully these pictures are showing there should be two income and expense photos side by side. I've highlighted the gross scheduled income. This is from acquisition for one of our sites. So gross scheduled income in year one of $250,000. When we listed it for sale 3 years later, we had increased that gross income to 400,000, and the bottom line NOI increased from at acquisition 160 to 227. So we do our job right, first and foremost, of addressing the customer's needs, giving them a better overall experience, which then supports us increasing the rates, as well as bringing in additional ancillary income streams, right? So you can see here in the acquisition income, insurance sales, inventory sales, fees, and other income. And in the sale, by 3 years later, where we had the sale, we had done an extensive rollout of selling insurance. And that's the primary bulk of the other income, really not a ton in inventory sales, but insurance. So you can see us moving the income, right, from modest insurance sales to a pretty decent number, jump from total of 10,000 to 12 3 years later. So that's a little bit of the process from a super high level, but just foundationally some of the concepts for what we do in storage. And then assuming we all do that right, that acquisition in just over 3 years delivered 33% IRR to our investors. They more than doubled their original equity. And from there, we deployed that into a next project using 1031 exchange. So some of the tactics, which I've already a little bit touched upon here, in the typical value add play is going from, this is a screenshot of the handwritten paper ledger of our first acquisition, and implementing technology and all the systems that we have at our disposal now, from a back-end facility management platform to the customer-facing website, mobile enabled, all to make that a much more seamless experience. Also, what it does is minimizes our payroll and our requirement to have an on-site manager full-time. By really utilizing these technology tools, we don't have to have someone sitting behind a desk 40 hours a week. And so we see that across at scale, our model at scale is to have one manager across multiple sites in one region. So in Pennsylvania, for example, I have one manager across our 5 locations. The technology tools are working for her, so she spends her days running out to do facility maintenance as required to meet customers when it's really truly necessary to meet customers for any issues that come up. And otherwise, a lot of this is automated in the back end. So that's the value add essence of self-storage. It's certainly not everything, but that's a big part of it, especially for us. Coming from our previous careers in technology, our first couple acquisitions were largely technology implementation play, which was great because that was our wheelhouse in our W-2s. What we added to that as we expanded our portfolio was expansion plays. So finding existing facilities. This picture here on the left, this is a mini storage facility. In the white rectangular outline is a beautiful 3-acre parcel of land that we are building onto. As you can see in the rendering on the right side, we're doing a multi-story climate control here. We're also adding to the single-story drive up. And meeting the needs in the area. Now, anytime that we're doing an expansion or a construction, we are looking very closely at the market supply and demand to make sure that we're not bringing to the market more than what the neighborhoods need, right? So that's a big part of our due diligence process, is really diving into the area fundamentals and making sure that we are building for what the neighborhood needs and wants and will support, right? We don't want to overdevelop any area. So that's a huge part of our due diligence process. And then the next step in our tactics as we grow and scale is ground up development. So buying completely raw land, as you can see here in the bottom left photo, and putting where nothing was before except shrubs and grass and brush and trees, putting in a completely brand new facility. So this is one of our projects that's under contract in Virginia. We're very excited to be bringing again, climate control, multi-story. There is some grading here at this site that we're able to work with to kind of build into the hill and provide single story, first story drive up in multiple parts of the building by working with the elevations. So that's a huge credit to our development and engineering team. So those are some of the tactics. And as we've grown over the years in experience, in team size, we didn't start out doing all of these, right? We started with just the existing value add and the more straightforward technology implementation plays. And as we've gained and grown our resources, we are adding all of these as additional options in our arsenal, which is perfect for these times that we're in right now. We have been finding more and more since probably early to mid 22, really, as rates started to change, that the existing value add projects, the returns just weren't there for what we were looking for our investors, right? So that's where we started to pivot into more heavier expansions and ground up development, where we are finding better yield and better overall returns for our investors. So, and with implementing those tactics, what we are able to do, what we have been able to do so far with this first acquisition, selling that one in December of last year, utilizing the 1031 exchange vehicle to help our investors avoid capital gains and acquire from that first small, modestly sized, 22,000 net rentable square foot facility into these two locations, where once all is fully built, we'll be just about 6xing that square footage footprint. So continuing to grow the equity and into larger and more legacy assets. This acquisition from 2019, the building was vintage early 80s. So we were starting to get to that point where the ongoing repairs and maintenance would be nickel and diming and really cutting into the returns for the project overall. So it made more sense for us to sell that, lock in the gains with the sale, and reposition those into newer assets. So both of these two properties, we are doing large expansions. We're more than doubling each location. And we expect that those will be legacy assets. Those are underwritten to be at least a 10-year hold. So we'll do the expansions, we'll do the lease up, and then go to refinance them between years 3 and 4. Upon the refinance, return at least a portion of the original investor capital, and then from there hold the projects longer term for ongoing cash flow. So all of that is delivering, is how we are delivering on our tactics to our investors. What we're seeing on a more macro level from broader headlines in the industry to support our ongoing thesis and our ongoing actions, there's been some major headlines. So in September of last year, Extra Space acquired the entire Storage Express portfolio. And this headline was especially noteworthy for 2 reasons. First, this is a REIT acquiring in secondary and tertiary markets, which primarily REITs have only been in the primary major MSAs. So this was a big step, extra indicating that the REITs are starting to look further afield for better gain and for better returns for their investors. And secondly, this portfolio included remote managed properties. And what that means is these are properties that are either fully unmanned or very skinny on the management, whereas the prototypical REIT facility in the primary markets is fully staffed. So those 2 components of this headline were particularly bolstering for us, because not only do we have a nearly remote management style, but we also are and have always been in secondary and tertiary markets. Storage Express specifically is in Illinois and Indiana. We have a large presence in Indiana, as well as one property very close by over state borders in Illinois. So that headline certainly supported our ongoing thesis of us building portfolios of these smaller to mid-sized or just more remote locations, bringing them together into a portfolio that will eventually be perfectly positioned for a sale to a REIT or institution. Something that the latest headline was just this morning, late yesterday or early this morning, Public Storage made a hostile bid to purchase Life Storage. Just about 11 billion. Life Storage their board did reject that offer. So we'll see where things go. But this is just another indicator of the major players in this space really doubling down and then some on the future and the continuing strength of this asset class. It's worth noting, historically, we've talked about how fragmented the self-storage market is. Even with these large portfolio acquisitions and these mergers and other acquisitions that are going on, only 36% of the storage space is owned by the 6 REITs. The other 22% is owned by the next top 94. And then the balance, the final 41% is owned by independent owner operators. So there is still a very decent percentage of the industry that is held across independents, right? So part of our acquisition strategy is identifying those independents and putting together portfolios. So there is still plenty of room to run there in the industry overall. Again, these are just some very simple high-level headlines that I thought was worthwhile sharing with you all as you're either considering storage or looking at doing more. And then on the technology front, we have always been incredibly tech forward. That's our background. And so our first acquisition in 2019, the whole value add, right, of standing up the technology and getting that all up and running. We acquired in August of 2019. We had all of that up and running. So by the time that COVID hit and lockdowns happened, we were able to transition really quite seamlessly to all contactless, self-serve, and remote operations. So customer-facing storage operations look a little bit. This is essentially the tech stack here, right? So storage is our back-end management system. OpenTech is our gate technology that integrates with the system. Automated is our customer-facing website front. Call Potential is our 24/7 call center support. And then when we ever have customers that go to collections, we use 2 vendors that help us navigate that journey of starting the collection process, notifying the customer that we're starting the collection process, giving them every opportunity to pay up and stop that process. Or if it does actually go to auction, all of our auctions are online. We do not do auctions in person with an auctioneer and a gavel and what you would maybe expect to see if you've watched any reality TV about storage auctions. It's much more economical to conduct them all online. You get a broader reach. You're able for people across the country to see what you have. And there are folks that kind of do follow the storage auctions if they're looking for specific things, whether it be cars, boats, or certain types of baseball cards or memorabilia or things like that. So by going all online, not only are you minimizing your overhead, but you're expanding your reach and your potential audience to maximize the outcome of those auctions. Primarily, though, auctions are really just going to recoup any expenses or any past due balances. It's not really a moneymaker. The money-making aspect of auctioning is getting back that storage unit and getting it re-rented and having a new paying customer in there. For our investors and for our partners, what technology looks like is a little bit of this, something that we have rolled out, especially given how much expansion and construction we're doing, is a 24/7 camera technology at our construction sites and a login for all of our investors. It can create a portal. It can create a profile to log in and view the project in real time. This is really, really incredible and exciting technology that, historically has been For the larger institutions, high rises, office buildings, major developments, thankfully, technology continues to change and grow and become more approachable financially for us to provide that to our investors. So we launched that last quarter of last year and are rolling that out at every single one of our construction projects so that our investors really feel like they have full transparency from us. And by using these kinds of tech tools, this construction camera technology, it allows our development and construction teams to travel less, right? Because to keep an eye on the site, we have these cameras set up where you can see more what's going on at any given moment. And it also just allows us really complete insight into what's going on at the sites. Otherwise, technology within our internal team looks a little bit like this. We're a Google shop. IMS is our investor management platform for distributions, electronic distributions, reporting, waterfall calculations for the projects. And then our internal functionality to keep all the team straight is Notion, Asana, Slack, and Calendly, to name a few. There's a few more, but it's always fun giving these talks to see how our tech tools change because, every few months or so, we either add another one or take out something else. The final topic I wanted to talk about, and then we'll open this up for Q&A, is just purely perseverance, right? Being in this 10 years, there's a fair share of ups and downs. And so, especially for those passive investors in the audience, this is something to think about when you're speaking with sponsors or speaking with other operators, just to see how long they've been in it, how long they've been in it together, what kinds of waves they've ridden up and down, and how they've managed through them all. The way that I keep on keeping on is through the communities that I'm a part of. So I've included some of their logos here to give shout outs to all of these amazing organizations. The connections and the people that we network with within the industry, within larger just business leader communities at large, and really focusing on continuous self-improvement, not only for ourselves, but also bringing it back to the very beginning for our people, right? And making sure that now that we have gotten the right people on the right seat on the bus, that we're continuing to give them everything that they need to be absolutely successful in their role and to grow into the next role, for them to see a forward path of progress, while also training up their successor, so that we are a company and a team culture where people love to show up and are excited about what they're doing on a day-to-day basis, on who they're growing into, their expanded capabilities. And so that might look like, for our on-site manager, that might look like sending her to one of the trade shows, either local or national. For our bookkeeper, that might be sending her to some specific training for real estate bookkeeping and accounting, right? Because there's certainly different than your standard bookkeeping and accounting, and encouraging the rest of our team to pursue ongoing education and self-improvement so that they can show up their best as the whole human being every day at work as well as at home and outside. So these are some of the communities and relationships that have been absolutely foundational for me. Also, our faith home is huge for us. And that, I believe, brings me to the end of my prepared content. I will stop sharing if I can find the right button, and hopefully this will open it up for any questions, comments, or feedback. I didn't go too terribly into the nuts and bolts of operations, but if any of this sparked any questions, more than happy to speak to any of it.
Perfect. Yeah, and I want to thank you for all that information you lent to us and the time you've lent to us so far. So yeah, please use that chat and Q&A function for any questions for Corinn, or if you have any questions about how it may apply to your self-directed IRA, now's the time, or you can reach me after the webinar as well.
Yeah, I do want to say, well, like I'm a huge fan, I'm trying to think of the right word, fan, proponent, advocate of what you all provide. I was very lucky to be able to develop some 401ks in my time in my W-2, and so have since been able to redeploy those into various other real estate and business investings, and just I'm so glad that we have that opportunity to take control of those retirement funds rather than trusting the stock market. I know I'm a simple person, and I know and trust real estate because I understand the concepts and the fundamentals, and can control a lot of the variables. Whereas in the stock market, there's just so many things that are far beyond my control and even understanding. So thank you very much for having me. I respect and appreciate everything that Camaplan does for folks.
Yeah, of course. I see a question came in, but just to address what you just said, yeah, it's a lot of people. I think 3% of the country knows about and utilizes a self-directed IRA. Everybody thinks you have to put your money in the stock market, whereas they can't use what they understand and control to utilize those retirement funds to better them with their their current understanding of different investments. So I appreciate you coming on and helping us educate more people and helping us change that.
Yeah, absolutely. Okay, I saw a couple questions come in. Thank you, Lynn, Ken, and Terry. So our minimum investment is 50,000. Our historic annual returns have been an IRR of 20%. Now we are shifting that down, acknowledging wherever we are going in this recessionary cycle. So our current projects we're underwriting to be at least mid-teens is what we're looking to deliver to investors. Terry, as to what we're looking for from potential investors, I think some of the buy-in minimum is the same. There is a whole educational journey of understanding, especially if you're new to passive investing, what that looks like, what to expect. Some projects, hopefully I touched on this. If I didn't, let me just quickly go through it again. Some projects are more equity multiple plays, right? So they might be a version of a fix and flip where we acquire something. We have one facility like this. It's up in Massachusetts. It's a 3 to 5 year play. There's no real cash flow during the projects. It's a pure equity multiple. We're gutting the entire inside, repositioning it, putting in legitimate storage, and then we're selling it because the property is really too small for us to do anything further with us. So this is our version of a fix and flip. And so we're not holding that long term. Any cash that's created during that project is going straight back into the construction, and the investor return will be upon the sale sometime within years 3 to 5. Our projections for that are a 3x multiple. So there's that type of profile of projects. And then there's also projects that are more geared towards long-term cash flow. So some of these larger construction, either ground up or expansion plays, there's not going to be any cash flow within the first years, call it years 1 to 3, while we get the land entitlements, while we get the building up and out of the ground, and then we get tenants in place in the building. That'll happen during the first 36 months. Then we go back to the bank to get it refinanced. And from there, we'll return a portion of the originally invested capital, as well as hold the asset for long-term cash flow. So there's a couple different profiles, and part of what I do when I talk with potential new investors is get a sense of what you are looking for, because each family is different. Everybody has different risk profiles. And depending on where you are in your life stage, I speak with a number of retirees or close to retirees who don't necessarily need to triple their equity right now. They're looking for a more stabilized cash flow type of project. So at that point, we have multiple projects going on. So that's when I can say, well, you might be a great fit for this one, or we're underwriting these next couple projects. These might be a good deal for you in the future. I don't have anything for you today, but I know what I have in the pipeline coming up soon. So let me make sure that we stay in touch so that I can let you know as soon as we have something that meets your investing criteria. So hopefully that spoke to some of the questions. Those are two of the general profile returns of projects that we are looking at, is either equity multiple or on long-term cash flow. Do I educate and train? My partner Sergio does a very little bit of that. So if you are looking for one-on-one coaching, will everybody be getting can I put into the chat my email address for folks to follow up on any of these like specific questions? Is that all right, Will?
Yeah, please do. And this recording will be sent out to everybody who registered.
Okay.
And they should be able to feel free to reach out to you, of course.
Yeah, so I mean, depending on the interest for coaching, we do a very, very little bit of that just because both Sergio and I give a ton of ourselves, and there's only so much of us. So and then for those who are newer to passive investing, how you get started, I would advocate a massive amount of education, and certainly I'd be more than happy to talk with maybe about where some operators and sponsors only have projects for accredited investors only. If you're looking around in this space and you see projects that are publicly advertised, and then you'll see a little tagline, this is a 506C for accredited investors only. So understanding where you are on the accredited or sophisticated investor status, it has to do with your net worth and your income levels. And then there are sponsors out there who do projects for sophisticated investors. So these are individuals who do not meet that income threshold to qualify as an accredited investor. And so we do investments for sophisticated investors. In that case, we have to have a pre-existing relationship. So we have to know one another for a significant amount of time so that I know that I've done my due diligence on educating you as a new investor to make sure that to the best of my capabilities, I'm not steering you wrong and giving you an investment that perhaps might expose you to some risk or more than what you are comfortable accepting or risking, essentially, right? Because this is investing. We do our very, very best to deliver on the projections, but at the end of the day, there is no guarantee of returns. And so when you're talking with those investors who are sophisticated and not accredited, there's a little bit more of a journey there in building the relationship, making sure that you are educated enough yourself to realize the decision that you are making. So we take a huge part of that. You know, we do try to give you as much knowledge and educational bearings to really understand what you're getting into, but we'll probably also point you to some other resources to make sure that you feel fully confident in the investment decision. This is not one that we take lightly. So hopefully that starts to answer those that are newer to passive investing, how you get started. And there's a whole bunch more to go through there. Let me look back into Terry, our vision for Ken. Yes, absolutely. Send me an email and we can talk further about things. Terry, our vision for the future. Thank you for asking. So we recently hired a COO. We were able to poach this individual from an organization called Store Space. While he was their vice president of operations for a little over 2 years, they went from 20 sites to over 100. And so we are looking to rinse and repeat the growth experience that he was able to really lead and shepherd at his previous employer here with us. Before he was at Store Space, he was with Public Storage and Extra Space for over 15 years combined. So all in, he's got over 20 years in the industry, very, very deep industry experience. We're absolutely thrilled to have him on board. I say all of that to support our vision of, I'm not sure if it's exactly sky is the limit, but our target for this year is 15 locations. So we'll see. We have 4 under contract now. We're not through the end of Q1 yet. So we'll see what the rest of the year has in store for us. Of course, we have to fulfill our fiduciary duty by our investors and only do projects that are a solid investment, that meet our investing criteria, and that we do believe are in the best interest of our investors. So that's our target, not exactly the sky. We think it's reasonable since we did 10 in 2021, 4 last year with all of the changing conditions and wanting to make sure that we only did projects that we believed in and that we knew could be successful amidst that changing rate environment. And hopefully I got to the questions. Will, do you want to talk a little bit about investments via self-directed IRAs to Tom's question, or do we kind of cover that?
No, I think I mean, I would like to speak on that. Thank you. Sorry for missing your question a little bit earlier, Tom, but we touched on it a little bit. But basically the way it works is it's not too different from when you're investing with your personal funds. However, it's a completely separate entity. So what we do is at Camaplan is we help you set up the IRA, fund the IRA via either transfer from an IRA outside of Camaplan or rollover from another employer plan you may want to use. And then we help you establish that entity, the IRA, which is separate from you, that will be the investor into the investment that you choose. We even help you. We even suggest that you get a taxpayer identification number for that entity to further help differentiate the two investors, yourself and the IRA. And then you work with your investment provider and gather the necessary investment documents. You list the IRA as the investor, send that into Camaplan with their asset purchase directive, and we'll process everything within 2 business days, assuming it's within good order, and then fund that investment and keep record of all the transactions and provide any necessary tax documents. So throughout the entire process, you can always give us a call. Most likely opening the account and funding the account, most likely you'll deal with me specifically. And then you work with a very qualified person in our operations department who would take you the rest of the way.
Okay, hopefully we got through. Julia, to your question, I answered you individually. Let me put it in the chat for everyone else as well. As far as our projected returns, cash on cash and appreciation, that kind of varies by project. Essentially, the minimums that we look for are 15% IRR, 7 to 9% cash on cash, and 1.9x equity multiple. Now that'll vary project to project depending on the project profile, but those are some of our basic guidelines when we're doing initial underwriting on projects. Thanks, Terry, for the feedback. Thank you all for the time today. I'm thrilled that we got in and out in under an hour. I sincerely hope you found this a worthwhile use of your time as I opened up today. And please don't be shy about reaching out if you have any questions whatsoever. I do try to be an open book. I don't have all the answers, but I do have a ton of resources at my disposal. So I'll point you to the experts if it's not me. Yes, Flora, here's my email. And our self-storage website is hfirecapital.com.
Perfect. Thank you, Corinn, so much for lending your time to all of us and sharing your wealth of information and your experience. I want to thank everybody who attended the webinar today. You'll all be receiving a copy of the recording or a link to the recording of the webinar. If you missed anything, you came in late, or you just want to go over something again, feel free to watch that. And if you have any questions about Camaplan, feel free to call us anytime at 215-283-2868. I'll put that in the chat, or reach me at wmucker@camaplan.com. I'll put that in the chat as well.
All right.
All right. I hope you all have no problem. Thank you. And I hope everybody has a great rest of their day.
All right. Bye. Thank you all. Be wonderful.
Take care. Bye.